what is up, everybody? Jeremy here, and welcome back to another episode of the Command Your Brand podcast. As you guys know, I'm always interested in all things tech because a lot of times it's making our lives simpler and helping us to make a lot more money. And that's what I'm excited about today. We have Matt Sutika with us today, and he's with a company called Obie. They are one of the leading platforms for real estate investors to get insurance, which I think it's one of those things that we forget about how vital and how important it is to what we do until we actually use it, and then it's a big deal. I know we just had a storm early this week, and I had a tree fall on my barn. Let me tell you, that was fun. So I'm excited to get a chance to chat with Matt today. Matt, thanks for hanging out with me, man.
Hey, yeah, thanks for having me. Look forward to it.
So you have an interesting background, man. Like you started out with State Farm. You were absolutely crushing it, founded your own agency before you ended up working with Obie. So tell us a little bit about that background, man.
Yeah, I have kind of a well-versed, depending on who you talk to. Some have thought crazy at some of these moves. Some have thought smart. Some have turned out smart. Some turned out crazy. But yeah, my background is my dad started a little State Farm in a small town. So that's what I knew. So coming out of college, that was the easy thing to jump into. So I got into State Farm, and just like my dad, I thought I was going to be a 50-year State Farm agent and never miss a soccer game. And that's what I thought insurance was. As I got into it, I got way more into it and realized that, nothing against State Farm. It was more me, not them, if you will, like almost like a breakup, right? Yeah. It's just, being involved with that one market, not being able to bring in the technology that I wanted to do, or I saw that was going to be needed over the next 5, 10 plus years. Sure. That led me to another point that I really like was how people come into insurance, or how they come to your company is how they'll leave your company. And so I realized that I wanted to spend all my time on partnerships. That's how I wanted to bring in business. So got an opportunity to build an insurance company based around a large real estate company called Century 21, where we were finding ways to, make that home process to obtaining insurance quicker. And then through that, Obie started out as a client, same type of thing as a partner. They had access to habitational business. They wanted to, just like Facebook, they wanted to find a way to monetize their business at the time. So they figured insurance was good. So they were a client of mine at the company called Skylight. And, we worked together. They ended up going through YC and realizing that they wanted to be more than just someone who aggregated, premium. They wanted to actually be an MGA or a carrier. And in the real estate space, it made sense for me to kind of want to jump into the insuretech, because I had been consulting a lot of the Lemonades and Hippos and different companies like that openly, and, just kind of made sense. It was the perfect time to merge, April 2020. Everyone knew what was going on then. It was really seamless. Everyone was happy. No one was scared about anything. So
yeah, nothing crazy was going on at all. Like nothing, man.
Yeah. So it was a great time to have a conversation with all my current employees. Like, hey, guess what? Guess what your boss just signed us up to go do? We're going to merge with this company, and we're going to be an insuretech now. And, but it was all for the better, and really, it allowed us to continue what I started back when I first started getting the inkling at my State Farm, is that I wanted to be able to control the technology. I wanted to be control how, business is coming in, and really merge those two. And that's really where, Obie comes into play.
What's interesting is you look at like kind of the insurance industry like as a whole, and I feel like, and you can correct me if I'm wrong at this, but I feel like it's one of those industries that's been slower to bring in a lot of the big changes in technology and things like that. And, we see this in a lot of different industries, but it looks like with what you're doing, you guys are really trying to disrupt. And I guess, what has that experience been like coming in with, we've got a totally new way of doing things? What have you come up against? What have you had to change? What's that been like?
Yeah, I mean, you're 100% right. We fall in what I call like the recession-proof things. It's like makeup, alcohol, taxes, death, and insurance, right? And no one's trying to reinvent really any of those, because they're profitable and they make money, and there's a lot of big players that say, stay away. So what challenges we had was, one, just the perception of the current agents or brokers, right? When they first started, Lemonade did not help this at all, because Lemonade came on this campaign of trying to kill the broker, right? So, the insuretech space, and really Obie in general, had this uphill battle, still fighting a little bit of just, we're not against you. We're here to basically help the broker get to their client faster, right? And the more that people have understood that, the better it's been, right? Of
Hmm.
course, we don't have any of the big standard companies, the State Farms, the Travelers, all states. None of them are super pumped that we're trying to get into the space.
Sure, because it like
They're
kind
the
of
big.
cuts out one of the middlemen, or the people that actually make them, the people in the middle that are making it cost more for you a lot of times.
A- Absolutely. It's no different than Expedia is like a great example, right? The
Right.
airlines had to just eventually comply that people rather go to an Expedia to find their airlines tickets than go to the individual sites. And so there's a little bit of that going on, mixed in with the fact that a lot of these big insurance carriers of the past, they're the Titanic. Like it takes a lot of movement. And I'm not going to say they're going to hit an iceberg because that'd be really rude to do that on this call here.
Yeah.
But
Yeah. Exactly.
if there was an iceberg, let's say that technology solved the future and you just had to get around it, they might not have as an easy moved and still might collide where we're building where we'll be able to maneuver and get around those icebergs. And really, I think that's what you're going to need to do for the next 10 years plus and beyond in the space is you can't just be slow and steady. You have to be moving because I don't know what 20-year-old or under 35-year-old you've talked to lately that doesn't expect everything instantly on their phone and yesterday, right? And if
Yeah.
you can't do that as a company, not just insurance, but just in general, you're not in good shape long term, right? You still have maybe the 50 and up crowd that's going to keep paying, but eventually they're going into retirement land and their insurance gets cheaper and you're going to be with this generation that really wants things liquid fast and they want the social media presence and they want to be able to connect with you not by phone, right? Or
Hmm.
by phone, but not actually talking,
Yeah, they
right?
don't want to call
So,
you,
yep,
which is weird because I
exactly.
feel like I'm 35, but I'm still like one of those people that's like, hey, can I call you? Is that okay? Like, I still like to talk on the phone. I guess I'm a little antiquated.
Yeah, I mean, you would be, more the outlier than the norm now, right? Like the
Yeah.
norm is texting. I'm even, guilty of that, right? I have texts come through my Mac, which I love, which is like, and people who I text probably don't like it because they just get like crazy sentences from me because I can be super fast. But
Yeah.
it really is. I feel like if I have to pick up the phone now, there's three or four things I can't also be doing. Where if I'm
Yeah.
texting or I'm emailing, things like that, or on social media responding, just I can help more people, right? As one
Hmm.
person. So where the phone, you're one on one, right? Like you got to really hear and listen, and I do think that's a big factor.
So Matt, this brings up a couple different things I kind of want to go into here. The first is um, when you're looking at like innovations you guys have created and what Obie does. I guess what things do you kind of see becoming less like things that you guys have done? Like I guess what part of those do you see becoming less new to the industry and more like industry standards as time goes on?
I think the instant quoting is the first thing.
Hmm.
At the end of the day, I'll speak in general. Majority of insurance policies within reason, unless you're doing like complex business, type policies, they have what's called a rate table, and they have X amount of underwriting factors, i.e., questions, for the layman's term, right? Like questions about the risk that they like certain answers and they don't like certain answers, right? Meaning
Hmm.
like if you answer the ones they like, you get a quote. If you put the ones they don't like, you don't get a quote, right? Make it
Hmm.
easy. And so being able to digitalize that where a consumer, whether that's a partner, whether that's straight from the website or just, your own internal brokers, right? Like we're not here to like get rid of brokers, right? Can within 30 seconds to 2 minutes, let's call it that time frame, have a way better process of going through, and obtaining a quote, you know, and that bleeds into a lot of other things, which the next thing I think will become mainstream is the idea of embedded, right? I am on a certain property manager's website where I hold my properties. Why do I need to go somewhere else to get the insurance when I can
Yep.
just go to that property, click the insurance button, and right within the same system, I'm getting my quote, I'm binding my quote, and then it's recorded. Maybe even make
That's a
payment
great
right from
point too,
there.
because I know even like with our landing pages, when somebody's going to like book a call with us, we use an embed to do that because I want somebody to have the UX where they're on my site and not on somebody else's site where I can't control everything, right?
Yeah, and it goes to what I mentioned earlier. How people come to you is how they leave you, right?
Yep.
And we believe in, I call it a double sticky situation, right? Where if we can be embedded in partners, right, which we can help keep people on their site, which is, anybody that has people logging into their site. They want you to be in there. They want you to always visit. They want you to spend as much time in their portal, if you will, as possible. So we help the partner through that, right? And then from the double stick situation, right? If you're getting your insurance through your property management company or whatever through that portal, you actually have to probably most likely leave that property manager to
Yep.
leave the insurance, right? And so we're making that property management experience better. So you don't want to leave that, right? And then of course, if you don't leave that, then you're not going to leave us on the insurance side, right?
Sure.
And so that's what is, I think, going to be key is how you approach your consumer, right?
Hmm.
We don't at Obie concentrate on Google or like that type of direct, DTC. Our DTC is direct to channel partner,
Yep.
right? Because on Google, again, if I'm typing like I want lower insurance and they sign up for Obie, like, yeah, we'll get some premium, but that person's probably doing that again in 6 months, right?
Hmm.
There's not
They're a
loyalty.
shopper. It's a mindset.
Yeah, and that's really not the customer that really too many people want. Now, a lot of people, not to pick on them, but a lot of people spend a lot of money for that customer because that's the only way they know how to acquire. That's not our bag. We also don't feel like our consumer is doing as much searching as maybe the home and auto industry does as
Hmm.
far as rate shopping. Most of our consumers have I'll use in quotations, have a guy or have a gal, if you will,
Hmm.
that handles their insurance. So we really concentrate on the partnerships and then the independent brokers. We want to be in their space. We want to give them the tools to write their business faster, maybe more competitive commissions. And also, we can get into this in a little bit. I'm sure it's a question, but a better product for the space, right? Something that actually represents the space and not a flipped homeowner's policy.
Yeah. And I guess when you look at it then, like, I feel like the insurance industry gets like a bad rap on a lot of different things, but it's one of those things that, you get in a situation, you're like, well, man, I really should have done that, right? Like we try to find the lowest coverage with the cheapest rate because, that's what we're trained to do. And I guess we get a bad rap because of that. Like, what are the things we should be considering around insurance, and how should we be looking at the industry differently?
Absolutely. The little gecko and Flo have just absolutely crushed the idea of the
Right, but when I needed
American.
to use Geico, they
Yeah,
dropped me, man. Like it's like what's the
exactly.
point of getting a cheap rate if I can't use it?
Yeah, they I don't know if they have a disclaimer, but they had their phrase, 15 minutes save 15%,
Yeah.
and really there's more to that. It's like 15 minutes save 15%, cut 15% of your coverage, right?
Hmm.
Like they
Yeah.
forget that
Well, and,
part,
and
right?
they're
Like
notorious too. Like I know we're not quite talking about auto, but like they're also
yeah.
notorious for like not using parts that are from the manufacturer too. So it's like the
Oh,
cost is being cut somewhere.
yeah, there's, everyone will tell you, and and anyone that's been living for a while knows there is no such thing as a free lunch. Everybody knows that.
Yeah.
If you're getting a discount, it's for a reason. So we don't actually, again, I'll beat it over the head, is that we don't want the person coming in price shopping, because again, if you come in a price shopper, you'll leave a price shopper. That's not our clientele. So, we concentrate on coverage in a couple ways. One, designing our workflow to not allow, by putting minimums in, we don't allow the consumer to unintentionally, I'll say, insure themselves incorrectly, right? Without warnings, pop-ups, or just on a lot of it, just mandatory, like you can't go below this, price per square foot or whatever the coverage is. The other facet is we work with your lenders, and the lenders are really dictating a lot of things for the, in the good way, right? Like it sounds like in a bad way to the client because the price goes up, but really they're making sure that, the property's covered because they have the biggest risk on the property realistically, right? They're going to
Hmm.
be in at least 80% of the value or, whatever loan you got. So the lender really does drive a lot of the coverages as well. So you have kind of two factors. Am I going to say that hits at 100%? No, because, people can, determine stuff, but we do try our best to, in the digital world where you're not having a conversation with a broker, right? You're not sitting down at the kitchen table. We do try to use technology and the questions that we ask, how
Hmm.
we have minimums and different things like that to keep the consumer covered, adequately. We really do focus on that.
When we're looking at that consumer, whether it's multifamily or somebody else in the real estate investing space, like what should they be considering insurance for? Like what sort of things should they be considering around that, and what does that look like? I think so many times, especially when you're you're newer to that space, you don't quite know what you need. Like, what things as an investor, like, should I be looking at in terms of insurance?
Yeah, so it's a good question. So you have, I try to always simplify because one,
Yeah.
insurance either bores people or confuses people, right? And so I try to be the least boring insurance person you've ever met, and I try to use words that, don't confuse anybody. And so there's
Sure.
three basic types of insurance for a property, right? In a very simple way. There's your property coverage, there's your general liability, and then there's an excess liability, or a lot of people will call it an umbrella, right?
Hmm.
Starting with the property, the most common things that you want to think is you want to insure your property so that if you have something like a fire, theft, vandalism, you have a big hurricane, water damage, broken pipe, all the things that you're probably thinking as a landlord that could happen, that happens, you're going to pay your deductible, your portion of that. They're going to come out and they're going to make it new for you, right? Or they're going to give the money for you to hire a contractor and make it new. That's going to be your property. Your next thing that could be a liability, right? And it goes with the name, is that you're going to have people on your property, whether you want them there or not sometimes, and they don't always walk perfectly, not trip and fall. They don't always, make sure they don't slip on ice. They don't, sometimes think and grab hot pans or,
I
burn
think the
themselves.
worst example of that is like, the people that are like, it has to say hot coffee on the cup, or they like they drink the hot coffee
Yeah,
and they're like, why
the
didn't you tell me
McDonald's
it was
rule.
hot? It's coffee,
Yeah,
man. Come on.
yeah. As a funny side note, I used to listen to this comedian. Is it Dave Evangel? And he had this like, here's your sign, but he had this segment about that. He said, and I'll keep it short. Every appliance that you see, from a hair dryer to a curling iron, they always have these tags on it like, don't use while sleeping, don't use in the bathtub. And his phrase, which I always think of the day, someone had to do that for it to be a warning, right? Someone had
Exactly.
to. Like, they're not making this up. Someone
You
sued
almost
them,
want to
or
shake their
someone,
hand. Like, I'm
yeah.
so impressed that you're the person they had to make that sign because of.
Yeah, it's like, there had one like, don't stick in, whatever, it's just like, it's like, hey, I'm about to go take a bath and then take a nap. Will you hand me my hair dryer or my curling iron? But someone did that, probably multitasking, and now it's a rule. Same with insurance. These
Yeah.
coverages didn't just come up because people weren't having them happen. My examples clearly are probably more real life than, that I'm laughing about now, because they do
Yeah.
happen. But that's going to be your liability. Someone hurts themselves on your property, and they, nowadays we're in a sue happy world, right? So, a lot of people sue for success, I call it. So, whether they fell on purpose or they're going to tell you they did, like, you're going to have things that could happen to your property that you want to be able to be defended, or have some liability coverage for, and that's going to be your general liability. And the last thing is your umbrella or your excess. And basically all that does is that's going to give you more liability coverage on top of your general liability, which is usually about $1 million in coverage. And really why that's important is to protect the loan, and protect your assets as an owner. I'm not going to go into LLC structures and
Oh
all
no,
that
sure.
stuff,
We don't have to do that here.
but in general, that's going to protect you and your assets and different like that. So that if something happens on your property, someone's not suing you. That's, something that sues you for your property, if you're covered correctly, should be an inconvenience and
Hmm.
shouldn't be devastation, right?
Yeah.
And so insurance really separates the two. It's still going to be inconvenient. You're still going to deal with stuff. You're going to have to deal with a claim, and everything like that. But insurance should keep it from it being devastating, where your rental property costs you your livelihood or your assets. And that's really what it's there to protect.
Matt, would you say those things are like kind of some of the biggest risks that investors aren't considering, or is there something else around that would also be a major risk they're not considering?
I think actually it's not as much the risk. I will say that most investors get the risk right, or the lender makes them get the risk correctly. I do
Hmm.
think that there is some investors out there that do cash deals, and they might be making decisions on how much to cover their building for, and they're trying to go low, and then you could run into a problem. But I think actually the biggest decision that throws a lot of people is the deductible, right?
Yep.
And do you want to
Well,
go low
because they're thinking of
deductible?
how much has to go out of their pocket when they do it, and they're not considering like everything else around it.
Yeah, absolutely. And they need to look at it, the deductible, like a business decision, right? It's because it's very simple. I'll give you a quick example. How I'm going to
Sure.
keep the property for 5 years, right? And the difference between a $1,000 deductible and a $2,500 deductible, let's call it $1,000 in premium for the year. So I know if I choose the higher deductible, over 5 years, I'm going to save $5,000. The average claim, and I love making up stats, so I'm going to make up one here, but it's pretty accurate, is you'll probably have maybe one claim in that 5 years, right? That's probably on average pretty safe bet to say. So I always say the trade-off is you're going to guarantee yourself $5,000 in your pocket, but the trade-off that you have to be is that anytime during that 5 years, I can call you. It's going to be 2 a.m. because it's always 2 a.m. or 3 a.m. when these things happen.
I had
and
a water pipe break at 3 a.m.
for,
once.
Exactly. You got to write me a check for $2,500, right? And really the cost analysis is a difference between 1,000 and 25, so it's 1,500, right? But
Sure.
just for the math's sake, do you want that trade-off? Is it worth it to you? $5,000 in your pocket, for one time having to do that. And if you have 2 claims, well, then you break even. If you have 3, you lost on that business deal. But that's no different than the market taking a crash before you want to sell the place and you don't get the ROI you want. Like, this is part of business, right? And that's really what I want my clients as it relates to deductibles to think about is what's the cost savings? How long am I going to keep the asset? About one claim could happen. And then after that, make a business decision. Also, do you have that $2,500,
Yeah.
if that happens, right? Like, do you have that or could you get access to that capital, right?
Well, this is a simple thing too, but I don't know if people consider it as well, Matt, is like, I think when people are like, renting your places, I'm sure they don't respect it like you respect it. You know what I mean? Like, at least
Nope.
when I've had people rent from me, man, like they break some stuff. I'm like, really? How did you do that? Like, I think your liability is higher in that too.
Yeah, absolutely. And you can offset the tenant's liability with a renter's policy, which a lot of people, know that that's something you put in place. Security deposits which is a business decision, not an insurance, decision.
Yeah.
And then, I can go through all the screening, better property manager, all those things like that
Sure.
can offset that. But from an insurance standpoint, you're going to be covered with your general liability. And then if you want something to subrogate that liability, then, force all your tenants to have a renter's policy.
Wow. Well, Matt, I've really enjoyed this conversation, man. I think we got into a lot of really great stuff for people that are interested in, connecting with you and seeing how you can help them. What's going to be the best way for them to do that, man?
Absolutely. The easiest way to connect with me is to go to obrisk.com/Matt, and you can get right to my page. It has email, social media, as I mentioned before, all the ways not calling me that you can get a hold of me, but there is a cell phone number too. So if you are like yourself, Jared, and you want to call, I will accept your phone call, but there's also about 6 or 8 other ways to get a hold of me as well. And, through that, we can maybe help you out.
Very cool. Well, Matt Sutika, thank you so much for hanging out with me today, man.
All right. Thank you.